So please do remember this, that companies that are growing, they try to use as much of their income and the cash that they have to further grow the company. They're not gonna give it out as dividends to their employees. Similar also to how Converge was, similar to how Amazon is, similar also to how Tesla was also. That's how you could actually look at it. Apple was like that also for quite some time until they started to declare dividends somewhere I think around 2012 or 2013. So how do you know what stocks you're supposed to buy? I've been very consistent in saying this also, that when you start entering the stock market, you need to have a plan attached to it. You need to know the reason why you're investing. But more than that also is you need to check where you are. Are you investing to grow what you have? Or are you in the market to get cash flow? Or are you investing because you just want to preserve already what's there, meaning you've already accumulated an amount that's comfortable for you, something that you're already okay with, and you just want to preserve that. So knowing where you are will help determine the stocks that you're actually buying. Because if you're also younger and you want to accumulate, then it makes more sense not to buy a lot of those dividend stocks yet, but it makes more sense to focus on companies that have growth, that are more volatile, that maybe have a bit of risk, but because they're so good in terms of how they will be, they could be projected to not do so well also over the short term because they're not making as much money. But think about renewable energy, think about electric vehicles, that because they're in a very relevant space, that investment could pay off also over the long term. And that's what I want to submit to you. When you are accumulating, focus on companies that may give you a bit of risk, but over the long term also could give you a bit of reward, because the potential for you to earn more will be, I think, bigger. And that's how I think somehow you can start to position your investments. Younger, don't have a lot of assets yet, you want to grow what you have, you're accumulating, you don't have to go for dividend paying stocks. You can go for stocks that are growing, that have the potential to grow more over the long term. And that's one way to be able to segment it. And then as you start to get older, you may have different lifestyle changes. For some, it might be the birth of their first child or second child, third child, fourth child, or they might still be needing to support their parents in a significant way. You can tweak your asset classes also based on who you're supporting, where you are, and what that money represents also for you. So if you're at the point in your life where you still need to make it grow, take those risks on. But as you get older and as life stages change also, and you would need a bit of security, that's where you start to pivot it. So if you notice it also, that will also determine what you buy. That will also determine what stocks you could also position in. Automatically also, if you're into growth, then all of the lists that I gave you for dividend stocks, then you don't need to actually get into them. You don't actually need to also position in them. But you can position with the ones that may not have good dividend yield, but they're giving you the potential for growth also in the future. So please do remember this, that companies that are growing, they try to use as much of their income and the cash that they have to further grow the company. They're not gonna give it out as dividends to their employees. Similar also to how Converge was, similar to how Amazon is, similar also to how Tesla was also. That's how you could actually look at it. Apple was like that also for quite some time until they started to declare dividends somewhere I think around 2012 or 2013. But the explosive growth of Apple, or at least from a capital appreciation standpoint, came in when they were not giving out dividends. And please do note this, that came in later also in my investing journey. When they give out dividends, it means that they have a lot of money and they don't already know also where to put it, or they can't maximize it in putting it in different allocations for them as well. So if you're asking what to buy, take a look at it first from where you are and your standpoint in life. It's either accumulation, cash flow, meaning you want to get passive income already from your investments, or you just want to have a store of value and preserve what you actually have as well. And of course, if you want to preserve value, then maybe you could go the preferred share route, meaning there's lesser volatility, you still get cash flow, but it won't really dip and dive already similar to the general market as a whole, unless also there might be a problem with the company that you're investing on. Every time also you invest in the stock market, even if it's preferred shares, if the company has some problems, the preferred share also may get a hit. So I may say that preferred shares are something that will also protect you, but you also have to do their fundamentals. You also have to safeguard and know that where you're investing in is still a company that if the company is not doing well, regardless if it's a preferred share or not, the value of the company may be hit. I guess one gauge for you to look at preferred shares is if they have the ability to pay out their debtors, similar to some companies that we've seen in the past that when there were doubts already that they skip on paying their loans, then that would have been a problem. I think that's one way for you to be able to somehow not make it complicated the way you would actually choose it, because that will help narrow down already the investments that you would want to get into, or at least the stocks that you want to also position in. Please do remember this, that investing should not have to be rocket science. It doesn't have to be super complicated. It just has to be based on what you actually need and what goals you're actually trying to hit. When you look at different, say, target prices, or you look at different narratives on what stocks to buy, it's also based on the narrative of the person who's actually writing that analysis. If they're more bullish on something, and also on their timelines. And you have to remember that analysis of different people may or may not also fit your timeline as well. That's why it's very, very important and very good to ask those questions as well when you start investing, and that will help narrow down and I think simplify the way you actually invest for the long term. Also do remember this, that it's nice to trade over the short term, but you always have to look at it from a long-term perspective, and that's where the power of investing based on the how you want to allocate or where you are in life will become very, very strong. And I already knew it, and I'll end with this, that when I was in my early 20s and I started investing in the stock market, I was in it to see where my positions or my portfolio will be when I'm 60 years old. When I'm older, I was looking at 3 or 4 decades into the future, not minding how it would be at that very moment, because that's the power of investing. When you build the base and accumulate and position based on what goals do you actually want to hit. And please do remember this, that your goals, your plans, and where you are also in life does not change depending on where the economy is. It doesn't really matter, because the economy could be bad, but you're still in a phase of accumulation. You accumulate. The economy could be good, but you're still in a phase where you still need to accumulate. So go accumulate as well. In the same way, the economy could be bad, but you're in a phase already of distributing what you have or getting cash flow. So you have to buy stocks that give you cash flow. In the same way, even if the economy is good, you should be buying stocks that give you cash flow as well, if you're at the point in your life where you need cash flow to be able to support your living and your expenses. So think about it, write it down, and try to assess where you are. Are you investing to accumulate, to get cash flow, or are you investing to preserve what you have as well? Put it down below, and if you guys have any questions, comment down below and I'll try to make videos on top of it. If you stayed up until the end, you get value from me talking about investing in the rain. Like, share, subscribe, and smash the bell so you get updated every time I come up with videos about investing. And if you want to know more about the stock market, I've written 5 books, I have thousands of videos, and I have different seminars that you can check and try to learn from as well. All of that is in the description below. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.